Yo, so here's my update after seeing how these markets perform throughout the day. We did see the recovery as I suspected. A lot of that came into the Dow and consumer discretionary, which we're repositioning into or rotating into. The S&P got green today. But there was a pretty broad sell-off at 3:30. Did that hit the Dow as well? Let me check. Yeah, it hit everything. I think it hit the NASDAQ the hardest. Well, NASDAQ and S&P about the same. And no, the RUT and the Dow relatively performed better on that sell-off. I don't know if there was any news behind that. I wasn't in front of the TVs or anything. What else was I going to say regarding that? Yeah, the RUT had an awesome recovery today. Let me just put a number on there. Almost 4% from today's pretty much open before the 3:30 sell-off. Remarkable. I mean, definitely positive. As I said, consumer discretionary outperformed. Then I even did a little research examination of relative strength on that 3:30 sell-off. Semiconductors and cloud data related cybersecurity performed worse as it did. It did recover, but kind of sold off in the afternoon. So there was like a full recovery between 11 and like 12:30 today. And then consumer discretionary kind of held up. Some down names held up, so like consumer staples, and as I've already said, consumer discretionary did well. Gold continues to do well. Silver continues to do well. There's a play like on minerals and what is it? Whatever, like gold, silver, and what does fall under? Gosh, doesn't come to mind. But those are, gosh, gotta look it up. Precious metals. Yeah. Now, something I just came to a conclusion to, and I'm kind of, to some degree, was banking on well, Bitcoin miners have been performing very well for 4 to 6 months, 4 to 6 weeks. Something I've been mostly in for almost a year now, or definitely 9 months. And then I've just been figuring it's probably just running ahead of Bitcoin, and they're anticipating a move on Bitcoin, and they still, a lot of them own a lot of the actual spot price and hold on to it, and they're still mining it to create more and all that. And then I'm looking at some of the treasuries, like Sol treasuries, ETH treasuries, and Bitcoin treasuries, of course, and they're just look sort of weak. I can't lie. Not terrible, but sort of weak, given on, overall these markets are still pretty strong the last 4 to 6 weeks. And then I think I just came to the realization, based on the price action of cryptos themselves, based on the treasuries, MSTR, everything, they're probably just running with other energy companies that they have energy infrastructure in place. So anything related to the possibility of creating energy has been going nuts. Check out Bloom Energy. B is up maybe 3x in 2 months, something insane. There's some insane shit happening, but um, overall, I guess the frothness of mega cap tech, clouds, semiconductors. Um, I guess I have my eye close on computing just to get a feel for how frothy are we, how close are we are to a bubble, and I don't really think we are. I think that kind of stuff needs to just almost go parabolic. Like Nvidia is now trading at 180. Like if we see like 240, 250 within a 2 month period, like another 30-40% move up, I think we're getting parabolic. So like if the mega cap tech companies, like a lot of money's going into like smaller cap companies, mid cap, as we saw the rut, like almost at a 4% move from its bottom today. It's easy to move those stocks when they're lower caps. Is there anything else I wanted to discuss from what I've seen today? Yeah, I mean, I guess to wrap it up is the indices kind of are holding up. Like today's close is not that bad, but obviously we saw a big sell-off on Friday. We're still yet to be determined, is it a dead cat bounce or on Monday. And then today looks pretty questionable. Like money's just coming into value and the sectors that I said that are like kind of lower cap. Even though I did see that, but it's also could be, it's always now considered a defensive play. So like after that 30 minutes, that sell off at 3:30, money did come into the Mag 7. But I'm not necessarily saying that's positive for like mega cap tech. I think that has become like a defensive play. Like where can I store my money if I'm trying to like get out of the market? So I find that to be mixed, but clouds, cybersecurity, data related companies, semiconductors look pretty weak. Even like MSTR, Circle, Bitmine, some of the treasuries look pretty weak at close. And like I think at this point I need to separate Bitcoin miners because they're doing their own thing. And I think it's based on a run for energy. So I think tomorrow is quite a big day to determine whether there is a full rotation coming on. Maybe these whole markets are going to roll over for the next 2 to 3 weeks or at least 10 days. If money continues to come out of those three, mega cap tech, but I still feel like the Mag 6 or Mag 7, like exclude Tesla. If money comes into that, that's not necessarily positive. It's become like kind of a defensive play. But if semiconductors, clouds, and data continue to get sell off tomorrow, or at least underperform the market tomorrow, actually, given what I've seen today, if I had to make a prediction, tomorrow we're down NASDAQ 0.5% to 1%. S&P's down about 0.5%. And the sectors that I've just mentioned continue to underperform. Consumer discretionary is probably around even, some up, some down. And maybe this energy play continues to run. So if I see something like that where 3 of the last 4 trading days, those 3 sectors are underperforming, I mean, I definitely don't have confirmation, but if I'm going to have to reach for a little and try to get ahead of this, I think that's somewhere we would have to trim. I think there's, could there be a flip where, like I'm looking at the 50-day moving average, like on Nvidia, it would be like 170, and like CrowdStrike. I'm trying to just get some of these big names on the weekly. So CrowdStrike, if it were to happen in about 2 weeks, the 50-day, it would touch around 465. It's trading at just under 490. So it's like 3 to 5% moves down, but at least in trading accounts, maybe it definitely doesn't hurt to trim. So I mean, that's what I'm probably going to commit to if we have another red day in those three sectors. I think, like I said, it's a little bit of a reach, but I think it's enough confirmation to know that it's more likely that those sectors are going to continue to come down. The indices are probably going to fall over for a little bit through the rest of October. And then the sell-offs on those could actually intensify and come down even more. But obviously there is a small chance that they'll rotate right back into that. And then this little run we're seeing in consumer discretionary fades off. These small caps fade off, energy fades off, and they pour money back into there. But I don't know if I had to put a percentage on that. If tomorrow plays out as I just suspected, 25 or 30%. So yeah, that's what I'm looking at. We'll see how tomorrow plays out.